Hi there, welcome once again to the Dukascopy TV studio. I'm Ben Jones. Back alongside me to discuss private banking is Rene Philippe. Rene, once again, thank you very much for joining us.
My pleasure to come, Ben. Hi.
So can you begin just by discussing very generally, what is private banking?
Okay, so banking is as old as the world, okay? But private banking, as we know it, actually originated in Venice in the 15th, 16th centuries, where you started to have banks which were handling, caring for a wealthy Venice's merchant. Okay, then it spread in Europe, and for example in England, where you had Court banks, which is actually well known to have been managing the royal family assets. You have also, for example, Rothschild Bank. Okay, so now the two main characteristics of private banks were, and are still a little bit, it was two things. Firstly, it was a bank managed by a family over generation. Like, for example, Rothschild, I just mentioned. The second thing is that the partners were liable on all their assets for any failure of the bank. It's also in the 16th, 17th that private banks started to add the word private after their name. And actually banks which were catering for middle class started to add the name saving. For now, those two characteristics of private banks, like the family tradition and the liability on all assets of the principals, it's soon to be a note in history book, because most of private banks, especially in Switzerland now, are changing their legal setup to become Société Anonyme, that is to say joint stock corporation. And in many cases, the only relations that the banks still have with the family is the name. And besides, now most big banks like UBS, BNP, Credit Suisse have a very strong private banking arms.
Okay, so what is left of private banking?
Basically, private banking, it's a way of banking. Okay, it's you are a client, you will have a manager which will be assigned to you, maybe one or more. Okay, and they will manage not only your wealth, they will also take care of your tax planning. They will take care of your inheritance, and they will take care of other matters. Also, one thing which is left is private bank has very good kitchen. I mean, if you go sometimes to have a lunch at a private bank, it's awesome. Which let me wonder, because I have noticed that the asset managers are doing a lot of drinking during the meal, so I'm not sure they are doing a lot of banking in the afternoon.
Okay, so is private banking just reserved for the ultra wealthy?
Alors no, there is a democratization in private banking. Alors yes, you still have banks which are requiring between 1 million to 3 million US dollar minimum deposit. But you can enter a private bank, and a good one, with as little as 200,000 Swiss francs. Okay? You have even a very reputable private bank which is waiving the minimum deposit. But there is an understanding with the client is that during the first year the client has to deposit at least 200,000 euros. Otherwise, the manager will not be able to maintain the account.
Okay, so where's the best place to open a private banking account?
Alors, it's a very difficult question to answer, because basically right now it will depend of two criteria. What is your nationality or your citizenship, and whether you are in good standing with the tax administration if your country of residence. The first distinction is this. You are an Asian customer, an African customer, Middle East customer. Basically, the world is your playground. You can come in Switzerland, you will be welcome. You can go in Andorra, you can go in Asia, in Luxembourg, in Monaco, you can go everywhere. There is no restriction for this kind of customer. You are a European resident. It's starting to get a little bit more complicated. Basically, nowadays you are a European resident, you want to open a private bank account, say in Switzerland, in Andorra, in Luxembourg. If you are not in good standing with your tax administration, if you cannot prove that your funds are declared properly, you can forget about it. So basically, if you are not in good standing with your tax administration, you may try Asia. Hong Kong, for example. Okay, don't go in Singapore because tax evasion is a criminal offense in Singapore. If you are a European resident, you have to know that, for example, places which were traditionally reserved for private banking, like Bahamas, today, Bahamas, if you are not in good standing, you are a European resident, not in good standing with your tax administration, you cannot open a private bank account there anymore. You are a US citizen or US resident, even if you are in good standing with tax administration, most banks in Europe don't want to bother with you. So it's a no-no opening in Europe, even if you are in good standing. You may try Hong Kong, for example, because, for example, we know that HSBC in Hong Kong welcome US customer, but you have to know Hong Kong is now FATCA compliant. So it will have to be an account which is declared with IRS. You may try China as well, which China is welcoming US customer. We are not sure yet what is the position of China banks and of China over FATCA.
Okay, so what are the requirements to open a private banking account?
Alors, the requirement to open a private bank account, it's of course a minimal requirement, the minimal deposit requirement, which I discussed before. Then it's like a normal bank with a copy of your passport notarized, a copy of another ID document notarized. They will require, of course, bank reference letter, sometimes lawyer reference letter, your curriculum vitae showing your experience and background. They will ask for more bank statement. In general, it will be 6 to 12 months bank statement. And where it's different is you will have also to explain the source of your funds. Alors, most banks only require an affidavit from the client which explain what is source of the fund. But in some case, you may also have to provide documents, and in some case, tax certificate.
So is the private banking business model changing?
Yes, it's a business model which is under a lot of pressure right now. If you take, for example, the case of Switzerland, you have to know that in 2013, 1/3 of Swiss private banks have encountered losses. Alors, to be fair to them, I have to say that most of the losses are related to the case with the Justice Department for the management of the US non-declared citizen assets. But still, it's a big problem because most of the private banks which have made provision for those matters have made very low provision. So next year, losses may be even more than this year. The second problem, it's negative flow of money. Basically, for a lot of private banks, you have more money from customer going out than new money coming in. Here again, I have to give a precision. It's basically you have two kinds of private bank. Small private banks with less than $5 billion under management, and big private bank with more than $25 billion of assets under management. For the big private bank, the flow of the money is positive. For the small and middle private banks, it's negative. The last thing, it's a business which is under consolidation. In 2006, private banking market in Switzerland, it was basically 45% controlled by big private bank. Today, it's like 75%. Just during the six first months of this year, $125 billion of assets under management have been sold to big banks.
Fantastic. Rene, once again, thank you very much for joining us.
It was always a pleasure for me to come.
And thank you for watching. Do make sure you keep clicking back to Dukascopy TV, as Rene will be back with part 2 of his interview looking at family offices. Bye for now.